What is up, everybody? Tyler here from Vant Trading. I am our head Forex trader for our fund Vant Trading, and I am here with you today for another trade of the day. And actually, it's not just another trade of the day. It is the first trade I took of 2021, and I want to go through this trade, explain my thought process, and how I'm trading right now with the start of 2021, because there is lesser volume, a lot more uncertainty. So make sure you're careful out there. Let me dive into my charts, what trades I took, my thought process, and what you should be looking at heading into the beginning of the year. So let's head on into my charts. All right, so here is GBP JPY, right? And heading into the day, let me show you what we were looking at here. This right here is when I was really looking at the charts, because I saw that it had rejected this level of resistance right here, created this morning star with a bearish engulfing candlestick, bearish close against this level of resistance. And now there's two things I'm looking at. I'm looking at, okay, we obviously have clean traffic looking left, so there should really be no problem moving down. And the next level I'm looking at as a level of support is somewhere in this area right here. So if I'm taking a trade right now, and this is actually where I ended up taking my trade, right at the close of this candle, my stop is above the current, or I guess now previous candlestick's high, and now my take profit is down towards this level of support here, right there. So this is a 2.5 to 1 trade, which is great. And heading into the new year, you should really make sure you hone in on risk management and good trade setups. And a 2.5 to 1 risk reward with this bearish engulfing candlestick is great. So one thing you should know, that with January, February coming along, there's going to be lesser volume. There's going to be a lot more uncertainty with what's going on with COVID and with the elections and the new presidency. So you got to be in and out of trades. Don't hold on to trades. Don't hold in hope. Don't let losers get big. You got to be big on risk management. So typically in the first month, maybe two, depending on how the markets look, I'll drop my size a little bit, and I'll be a lot quicker and with my trades, right? So let me move. So now I'm in this trade, and now I'm moving forward to the next bar. Okay. Now we're up in this bar and it closed bearish. And what I'm looking at now, as it's closed bearish, is okay. Now it's at this area right here of liquidity, to where it rejected before. It had some trouble before, right in this zone. And actually, London session this morning, it's where it had a little bit of trouble as well. So I'm thinking to myself, okay, we may have a little bit of hesitation in this area, so it's okay if it comes back to my entry point, as long as it doesn't violate market structure and doesn't start creating a new 15-minute high. Because at that point, it might just end up playing with support here, like it did before in this area, and coming up to stop me out, then just to move down. So if it starts breaking the previous 15-minute high, at any time in the next bar or two, then I'm going to probably close half my position and see what happens. But so let's see what happens. Click next. Okay. So the next candlestick never violated the previous 15-minute high if you look closely. Yes, I figured it would come up and retest it, which is what it did, because it was at a pretty significant area of support, but it never actually violated and ended up actually closing below that area of support. So now at this point, I'm taking half off my position. We're up about 10 to 12 pips in this. We're up about 10 to 12 pips, and my total profit is about 25. So I'm taking half off and setting my stop to break even, and letting the rest ride to my full take profit. Because you got to make sure with the new year, with low volume, that you're paying yourself when you can, and you're not, you're giving your trades a short leash with a good risk management, right? Good risk management, and good risk management means paying yourself and moving stop to break even. So now next bar, boom, hits my take profit and I'm out. Typically what I might do when it's like in prime season, after March, April, May, June, in those months, I might leave some to see if I can get a big runner of the day and see if I can get it moved down to maybe this area over here. But with the low volume right now, a lot of uncertainty, news can come out easily. It could really hold its levels, and I didn't want to get stuck like that. I wanted to pay myself. So I took full profits off here at 25 pips and I'm done. Now, if you exit out for the day, it did end up doing exactly what I thought it might do, but it's important to know that now this is hindsight bias. It could have easily done the exact opposite and started moving up and stopped me out. So you got to know that the stuff like this might happen, but more often than not, the market's going to teach you a lesson, and I'll end up getting stopped out and not make as much as I wanted to. So you got to know that, right now, with these times, with these volume, pay yourself, have good risk management, and then leave the market. Because after this one trade, I was done. I shut down my chart and I was moving on because I was up a few percent on my portfolio for the day, right? So that was that trade for the day, and I had one more I was looking at, and that was US30. And if you look at this, it really fell off a cliff today. But looking more in depth, I was trading this morning right in here, right? So it was obviously having this lid right here. And let me replay to where I was looking at it. It was right around there, right? So it was obviously a level of resistance here and then a level of support right here. And I told myself, if we can get a close above this zone and have a retest and then close bullish again, I'll buy. If we can get a break below the zone, retest and close bearish again, I'll sell, because I wanted that retest and close because I didn't want to get faked out, right? So let me move forward. Boom, it closed below. But I'm not buying yet because I want to get a retest. I don't want to get faked out, and I think you have this little area right here it could end up supporting. Move forward. Boom, this is the retest. Now what I'm saying is I'm either going to buy on the close, or I'm either going to sell on the close of the next candle, or I'm going to sell as it starts breaking these lows. We'll have to see what price action gives us the next candle. Okay, I'm not in yet, because as you can see, it closed bearish at the level of resistance and support, but it was a small bearish candle, and now I want to see it break these lows for me to take a sell. And if it starts breaking those lows for me to take a sell, I'll put my stop above, back in the zone right up here, and my take profit will be right down. My first take profit will be right in this zone right here, and then my second take profit will be down in this zone right in here. Right? So now let's see what the next candle gives us. Boom. So as it started breaking below, I got in short, and as you can see, it started pulling back. So at this point, after it went down, broke the low, and pulled back, I closed half my position there because I didn't want to get stuck in it a full loss. You got to make sure you never let your full position go to stop loss. So that's where I took half off, and then let's see what happened. Next candle will start moving down. And now what I did, and you only want to do this when you're experienced with this is not a very easy thing to do, is I added the position I took half off as it closed bearish right here, because now I figured, okay, we got this wick out of the way, we got people faked out, now we should continue back down to this zone, right? So moving forward, boom. So I took half off right here, and that was about 1.5 to 1, so not a full 2 to 1, but it was half off, and I'm letting the rest ride to 3 to 1, right? Continue moving forward. Boom, I am out of my full position at 3 to 1 right here. I took half off at 1.5 to 1, the rest off at 3 to 1, right? So overall net, this ended up being around I guess it was a just over 2 to 1, maybe 2.25 to 1 trade. So still really good risk management, good risk reward, and now I'm done. Because now, if you notice, we're into the 9 o'clock, 9:30 when the New York market's opening, and it can get really volatile at times like that. So that's when I'm out of the market, 2 wins for the day, not going to get greedy, and I'm done. See what ended up happening today, and ended up just falling off the cliff. Now, nobody could have predicted that. That's obviously hindsight bias. So don't get caught up in that. We had a really good 3 to 1 win, a really good 2.5 to 1 win, and be done for the day. Don't get greedy. Greed kills a trader and blows your accounts. So that's it. That's how I traded today. And make sure that with times like this, with low volume, you stick to risk management. You stick to keeping your trades short and in and out. and you make sure that you really keep losses small. So that's it. I hope you learned something from this trade of the day. I'll keep posting this week with trade of the days as long as I have good setups, and I'll as much as I can, I'll keep teaching you with this low volume how you can trade effectively. If you found this video helpful, informative, you enjoyed it, please leave a like, please comment, and we'd love to hear from you. And if you have not already, please subscribe to our channel. Have a great new year, and I will talk to you later.